What's going on? This is Adam Hammond with Movement Mortgage, and today we're diving into the maze of what we call interest rate locks. We're talking about 30, 60, 90-day locks, including longer term locks. So be sure to listen because understanding this could save you thousands. What does it mean to lock in your interest rate? Let's just cut to the chase. Locking your rate means you're essentially freezing the interest rate offered by a specific lender for a specific amount of time. No rate hikes to mess with your plans. Think of it as a handshake agreement that keeps everyone honest. So why do people even lock an interest rate? Because the market is as unpredictable as our weather. Interest rates can rise in a moment's notice while you're looking for your dream home, and you don't want that to happen. Sometimes interest rates can change multiple times a day, or the pricing of those interest rates. So what you're doing is you're locking in safeguards within your budget. Most buyers lock their rates, others lock it when it's time to choose. Most people lock in their interest rates while others take time to understand which lock to choose. That's why we're here. So a 30-day lock is the quote unquote sprinter in the rate lock race. It's typically the cheapest, but it can be the riskiest. If rates change in a moment's notice and you're not locked in, that can be devastating. It's great if you're closing soon, but let's get real. How many home buying processes do you know that wrap up in a month or less? Time flies and the clocks run fast. So it is the most common and the most readily used interest rate lock to close in a 30-day period. Now, 60-day lock. I like to call it the middle child. There is a bit more breathing room here, but the cost usually isn't much higher than a 30-day lock. But it gives you a little more time to navigate these hurdles. If your closing is taking its sweet time, but it's on the way, this one is probably your choice. Now, the 90-day lock, the more of the marathoner. It gives you plenty of time, but at a price. Literally, you'll pay a bit more for this one. But if you're in a complex situation, or you foresee delays, or you're building new construction or renovation, sometimes it's worth the extra money and not gamble with your financial future. Now we get into longer term locks. Most of the time, these are used for new construction or when you're facing extended delays. These can go beyond 90 days and up to a year, sometimes even a little more. These are like buying insurance for your interest rate in a very volatile market, which we've seen more and more of over the last 6 months. Listen, if you're going long term, call me and let's talk. This is where experience makes or breaks your wallet. You know, a lot of people ask, why are there various locks? You got the rate, you got the time frame. If it doesn't work, you extend it, etc. Everyone has a different threshold of risk, and not everyone has the same timeline. Some people want to close fast, and some have more complicated deals that take time. That's why these options exist, to give you flexibility. But remember, flexibility comes at a cost. A good leader can help you navigate these waters. Keep in mind that every time you extend an interest rate, whether it's 7 days, 15 days, etc., and most lenders have caps on how many times you can extend it, there is also a cost associated with this. A lot of times in the marketplace, we see lenders and real estate agents not give you the full detail when you say, I need 10 extra days. Sure, we got it, no problem, but they leave the part out that is the cost. Now, there are times that lenders cover that, especially for lender-created issues, which happen from time to time. Don't let anyone fool you. It is part of the business. There are unknown circumstances that come up throughout the process, whether it's losing a job, buying a car. That's why it's important not to mess with credit while going through this process. Long-term locks typically come with an upfront fee that may or may not be applicable at closing, and typically that upfront fee is dictated based on how long you lock. Interest rate locks are tricky because most lenders are hedging on the secondary market. Therefore, it's important that we meet the closing date on time within the lock period. Again, there are unforeseen circumstances that require you to extend a lock or change a lock or whatever. So we've unlocked the mystery of interest rates today, or interest rate locks today. If you have more questions, leave me a comment, DM me, call me, Don't play dice with your interest rate. Lock it like a pro and build your wealth. Again, this is Adam Hammond, your guide to smarter mortgage decisions.